Hello, people. Got another Hump Day update for you.
Woo!
Got a lot of news to get through, so we're going to go ahead and start with a quick recap of last week, starting with the DXY pushing to a 19-year high around 107.
Damn!
So the euro, yen, and pretty much every other major currency continued to weaken against the dollar. The wrecking ball continues. We also had oil and commodities fall significantly on stronger dollar, recession fears, and forecast of demand destruction. Partly related to China's COVID lockdowns, which sparked additional concerns for global demand. Obviously, the biggest marginal buyer of things, so them declining is having a serious impact on commodities around the world. But that is all we got for the recap. Let's transition to U.S. markets this week, starting with the biggest story, CPI coming in at 9.1%, the largest year-over-year increase since, I think, 1981.
God damn!
God damn is right. Core CPI came in a little lower than last month at around 5.9%. I think it was like 6.1 the previous month. But the indexes for gasoline, shelter, and food were the largest contributors to the 9.1%. Gasoline was at 59.9% year over
Oh,
year.
hell no!
That's what I'm saying. Shelter 5.6% year over year, and food 10.4% year over year. So lots of inflation. That's obviously the biggest story. You can dive into this. This is the Bureau of Labor Statistics report where they talk about all the different individual items and their inflation rate, all the different baskets. But right here, if you see, this is a nice little visual of the CPI. This top one being the headline number increasing month over month, and this bottom one being core CPI, which is CPI minus food and energy, which are more volatile. So they cut those out, and we actually saw a decline a little bit, not anything crazy to write home about, but a decline no less.
Totally.
But yeah, if you are interested, definitely check out the whole report. A lot of jargon and nonsense, but you'll get some insight into the inflation story, get some more context behind that crazy number. But let's transition to the next story, and that is, scroll up a bit. Most Americans think that the U.S. economy is in a recession right now, as the Economic Optimism Index tracking personal financial outlook has its lowest reading since the index began tracking American sentiment in 2001. Stormy weather ahead. So the 6-month economic outlook, I think, actually increased a little bit from the previous reading, which was the lowest reading in more than a decade. But the personal financial outlook, so individual Americans assessing their own personal financial outlook in the future, that reading came in at an absolute record. So had the highest reading of the Economic Optimism Index ever since it started back in February 2001.
What?
So basically, ever since we started tracking it, sentiment for personal financial outlook has never been worse. Go figure. The reasons, as you can probably guess, are inflation and now fears of recession. So just as Americans were ready to head out on vacation, gas prices sting and many flights have been canceled. If you guys have been following that, our beloved Transportation Secretary Pete Buttigieg is doing a splendid job over there. But I mean, 4th of July, there was like 1 million flights canceled. Not literally, but thousands. It was unreal. It's absolute chaos right now. But I mean, that's just one of the many factors. That's more of a tangent, but that's just one of the many factors contributing to the overall sentiment about the economy and the decline. So 89% of people are scaling back on their travel plans, and 58% of Americans believe the country is in a recession.
Damn!
So well over half of Americans believe we are already in a recession. And based off of the last GDP growth, which was minus 1.6%, and the Atlanta Fed's forecast of minus 1.2% growth for the second quarter, that would indicate that we are headed for a recession, or technically in one, because the technical definition is 2 consecutive quarters with negative GDP. So not looking good. All right, let's transition to the next story on a little bit of a brighter note.
Oh, yeah.
I mean, not for Elon, but so Twitter and Musk are at it again. Surprise, surprise. Elon Musk requests to terminate the Twitter buyout deal on the grounds Twitter misrepresented the number of bots, among other things. And Elon now faces a lawsuit from Twitter, which is trying to force him to follow through with the deal.
Say what?
So basically, Musk is... where is it? Musk's attorney claimed in the Friday letter that Twitter breached its obligations related to the acquisition by allegedly failing to provide Musk with the information necessary to calculate the number of spam accounts on the service. So this is what him and Musk and his attorneys are saying, but this right here is all you need to know, because I think this is the real reason. So when Musk initially came out publicly with his stake in Twitter and this whole debacle buyout started, Tesla shares were at over $1,000, $1,100. And he had plenty of capital because he's using his Tesla shares to borrow against them, basically, so he can buy Twitter. And he had plenty of capital, but now Tesla is down significantly. Like 30-something%. So he has considerably less money to use to buy Twitter, because he doesn't have as much money to borrow against, because that's where his wealth comes from, richest man in the world, but most of that is tied up in Tesla shares. So when this goes down, he has less money to borrow against to finance something like a $44 billion Twitter buyout. And then also, this chart right here, Twitter itself is down like 30% from his bid price. So he is, undoubtedly just overpaying for Twitter. His timing was bad. And so I think he's really just trying to weasel his way out of this, and he's using the bot as an excuse to avoid having to pay $44 billion.
No!
But the catch is he actually might have to pay at least $1 billion and a fine, essentially, depending on how this pans out. But yeah, he is in a tricky situation, to say the least. But what's new? That's Elon Musk for us, right?
Oh, yeah.
All right, transitioning to the next story. We'll actually move on to foreign markets. So we already talked about the dollar being just on a tear recently, going all the way up to 107. Well, part of the reason for that is because the euro is struggling so hard, just depreciating. A lot of this related to the war and inflation, energy crisis in Europe. But the story here is that the euro flirts with price parity to the dollar, meaning like $1 for $1 worth of euro, or €1. Basically, they're trading at equivalent value, 1 for 1. And that's not really a big deal. It's more of a psychological thing. But at the same time, it's a testament to how much the euro is struggling, because it's the lowest level, I think, pulled up right here. The first time since December 2002 that the euro has reached parity with the dollar. So it's historic in that sense, because it's been 2 decades, basically, since this ever happened. Euro showing really, really strong weakness. That makes sense. Kind of an oxymoron.
You're a fucking idiot.
But yeah, Euro's not looking good. And so just really wanted to emphasize that, because it's not just that the dollar is strengthening, it's that the euro is weakening so much that relative to the dollar, that you're seeing strength. So it's not always dollar strength, it's other currency weakness, euro being a prime example. Next story, this is crazy. So I don't know if anyone's heard this, but Sri Lanka's economy collapsed.
What?
Exactly. So it has to do with so citizens stormed the presidential palace. I don't know if you've seen this video that's circulating right now. I'm not going to look it up right now, but it's basically like thousands of people surrounding the presidential palace and eventually storming it and taking over a really faulty government. They're not doing their job, so that's why they're engaging in this revolution. But the reason for it is that fuel and energy prices are soaring to really unattainable levels. They can't, or unsustainable levels. The currency, I think, is in here, collapsed by 80%. Yeah, so the government owes $51 billion and is unable to make interest payments on its loans. and so it printed its currency. That's why it presumably has depreciated by 80%. But can you just imagine your currency collapsing by 80% and what that means for your food costs rising? I mean, it said food is only rising by 57%, but even that, I mean, doubling the cost of food. So you can imagine with necessities like fuel and food going up so much in price, and having people in Sri Lanka unable to withstand that. They are like rationing food, skipping meals. So at a certain point you have food riots, and this is something that comes up in history. When you can't even eat, of course you're going to storm the gates and destroy the capital, whatever it is, and that's what we're seeing. So this is a pretty wild story. The sad truth though is it probably won't be the last. I have to say that at least part of the reason for this is they have a lot of dollar denominated debt. So as DXY, or just the dollar in general, appreciates relative to Sri Lanka or other countries' currency, their debt increases too, and it's getting to unsustainable levels where they can't make interest payments, and then they default. So this could happen to many countries. I wouldn't be surprised if this is just the beginning. As long as the DXY keeps going, or even just stays at levels right now, the level that it is at right now, we'll probably see more countries fall to default just like this. I mean, hopefully not, but I think that's just the reality with where the dollar is headed, unfortunately.
Oh, hell no!
Let's transition to something a little bit less depressing, though. Not that this is, but so this is a crazy story just because it shows how much of a failure Western sanctions and just our approach to Putin has been. But soaring energy prices have pushed Russia's current account surplus to a record $70 billion in the second quarter, despite Western sanctions, and the ruble has continued to gain against the dollar.
Little bitch.
So I don't know if you guys maybe recall, but Biden not too long ago went on TV and he was announcing how the Russian ruble had collapsed to a penny worth of the US dollar, and he almost literally timed the bottom of that, because ever since then the ruble has appreciated dramatically. Like since that point it went up by like 125%.
Come on, man.
So just a testament to how much the sanctions are failing, because not only is the ruble, which was presumed to collapse amid sanctions, not only is that appreciated dramatically, but Putin and Russia are making more money than they ever had been, because energy prices are soaring, and they're basically operating outside the financial system, the Western financial system that the sanctions are preventing them from operating within. And normally you'd say that's a death sentence, and historically it probably would have been the case, but it's not the case now, because people want oil and he's willing to sell it, Russia, Putin, willing to sell it at a discount to countries like India, who then ironically resell it to the United States and make money through that arbitrage trade. So we're basically just screwing ourselves with these sanctions. If the US really wanted to get serious about defunding the war machine, they'd probably start investing more in energy to increase supply and flood the market, because the only way they really stop Putin, I would suggest, is if they get energy prices down, because that is Russia's strength. I mean, they are an energy nation, and as long as oil prices, natural gas prices are as high as they are, he's going to keep being able to do exactly what he's doing. So hopefully they get it together, but I don't see that happening, just because they're so attached to the green agenda that they wouldn't be willing to invest in the capex necessary in the oil market to increase supply. Kind of runs counter to the current administration's base, which they want to appeal to. But that's another story. But I still think this is a huge headline, because it really demonstrates just how ineffective U.S. sanctions have been, despite what maybe people are hearing on the media or cable news or whatever it is. And on a similar note, we'll transition to commodities, but still has to do with Russia. So Russia has shut down the Nordstream gas pipeline to Germany for maintenance.
Right.
though it's unclear if and when it will come back online. So the main natural gas pipeline between Russia and Germany shut down for a scheduled maintenance Monday, raising concerns that Moscow could use the repairs as a pretext for a longer shutdown as it wields energy supplies as leverage in the Ukraine war. European ministers warned that it was unclear whether Moscow would turn the taps on the Nordstream 1 pipeline back on after the 10 days of scheduled work. Germany's economy minister said Berlin was concerned about a nightmare scenario this winter if Russia decides against doing so. So basically, Putin is saying, my natural gas, your problem. And he's kind of just demonstrating to Europe and Germany that he can really hurt them. I mean, he can hit them hard where it hurts the most by cutting off the natural gas they desperately need. And this is probably just like a foreshadow or a test to just let them know, like, hey, I control you, for lack of a better term. And hopefully he turns it back on for the sake of Germany and Europe, but it really depends. I mean, obviously this is a strategic move and something to keep an eye on, because if he doesn't turn it on in the next 10 days, even if he waits 10 days, it's going to pose serious problems for Germany and Europe. But if it stays off after that 10 days, I can't even imagine the inflation and the problems that Germany is going to face, which brings us to the next problem, specifically on Germany. Just amid all this craziness with inflation for natural gas giant Juniper, who is the largest supplier of gas to the German markets, submits a bailout application to the German government as energy prices squeeze its margins.
And we say bye-bye.
Now, I don't think it's mentioned in this article, but I believe that Germany has imposed price controls on natural gas, basically saying that natural gas companies like Juniper can't charge more than a certain amount. And anyone who's familiar with the fundamentals of economics will know that anytime you have a price control, it inevitably leads to shortages.
Yep.
Because if you suppress the price, they can't make the money they need to produce the thing. They're basically losing money by producing it because the price controls are forcing you to sell it for less than it costs. And at that point, you're just going to shut it down and not sell gas because you can't make money. You'll lose money doing it. The only other option is that you get the German government, in this case, to backstop basically the company and support the price control because they have a seemingly unlimited balance sheet. But obviously that's not sustainable, and that poses serious problems for Germany. So the company has received Juniper only 40% of Russian contracted volumes in recent weeks and has been forced to source the replacement volumes at significantly higher prices. So as Russia cuts off more of the gas, they're probably going to have to source from even more expensive sources, or just more of their gas from those expensive sources, which is only going to add to the problem, meaning they will definitely need that bailout, or the price controls are going to have to be lifted. Either way, doesn't sound like a good situation to be in for Germany.
Aww.
All right, let's transition to another big commodity story. So Turkey, Russia, Ukraine, and the UN are meeting today to discuss a possible deal around resuming grain exports out of Ukraine through the Black Sea.
Nice.
Now, as most people probably know, Ukraine and Russia are some of the biggest wheat suppliers in the world, but they also contribute in large part to fertilizer exports, or at least the commodities that are used to create fertilizers. And then Ukraine also is a big producer of corn and sunflower oil. And the Russian invasion and sea blockade of Ukraine has stalled most, if not all, those exports, leaving dozens of ships stranded and more than 20 million tons of grain stuck in silos at Odessa, which is the port.
Oh, hell no!
Preach! I actually have a cool little graphic to help visualize this. So this is Ukraine, Russia, Turkey, obviously. This is Odessa, the port. You can see the kind of wheat icons. These are the silos where they have to load it up on the ships and then take it through the Black Sea to this port in Istanbul, or this canal in Istanbul, Jesus.
You're a fucking idiot.
Into the Sea of Marmara, which connects to the Aegean Sea, or just essentially the Mediterranean Sea. That way they can get those wheat exports all the way to the African nations, like Egypt specifically, which is struggling a lot with food shortages and increased prices, but really everywhere in Europe that gets wheat imports, just because Ukraine and Russia are huge exporters, some of the biggest of wheat among other commodities. But as long as they can't get from Odessa to the Mediterranean to actually make those shipments because of this Russian blockade right here, they are, for lack of a better term, screwed.
Totally.
And so the coming harvest is also at risk as Ukraine is now short of storage space due to the halt in exports. So basically the wheat they have right now is all locked up in the silos, and I think it's at risk of going bad, which means they would just lose it. So they're definitely in a rush to get that out so they can at least fill up their storage and not waste all that wheat in what is already a disastrous shortage. But yeah, that's it. This is a pretty big news. Just another sign, I would say, of the leverage that Russia has right now with how they've positioned themselves in the war, preventing most, if not all, the major commodity exports from getting out of Ukraine to the world, Africa, Europe, and anywhere else, but mostly Africa and Europe. All right, so that does it for the commodity stories. Let's transition to crypto. So the first story I'm going over right now has to do with Mt. Gox repayments. So Bitcoin faces potentially strong selling pressure as these Mt. Gox payments, which was the exchange from, I think it was like 8 years ago. Yeah, 8 years ago, the Mt. Gox exchange imploded. Lots of people lost money, and it appears that a portion of that money, not the whole thing, is 150,000 Bitcoin out of the original 850,000 is going to be recovered, or has been recovered, and will be issued as reimbursements to some of the people who lost money during that implosion. And they have the option of receiving it in cash, Bitcoin, or Bitcoin Cash. Like anybody's gonna fucking do that.
You're a fucking idiot.
But they have the option, and if someone chooses to receive it in Bitcoin, they can sell that on the open market, which obviously would put downward pressure on price. Now, it's unlikely that all this Bitcoin is just going to flood in the market and just, draw down like crazy, but there is potentially going to be some selling pressure as more people get Bitcoin, because back when they got it, it may seem like Bitcoin's low now, but this is dramatically higher than what it was during Mt. Gox, so they would be sitting on what I'm assuming is going to be large capital gains. We'll see if they sell, but something to keep in mind if you are a Bitcoiner or just concerned with the Bitcoin price. Next story we got has to do with Terra. So more than 48 projects previously on the Terra network have started migrating to Polygon.
And we say bye-bye.
Now, as you can imagine, this has to do with the UST debacle that ensued not too long ago, where the stablecoin UST depegged, and Luna collapsed, just nonsense, and led to a lot of contagion in the crypto space. But ever since then, their credibility, the Terra network's credibility, has been shot, and this is just one more step kind of reaffirming that. You have more than 48 projects that are just saying bye-bye. And interestingly enough, Polygon has actually committed like $20 million to help facilitate this. So for any project that wants to come from Terra to Polygon, Polygon will be happy to provide them both financial assistance and technical assistance. They'll provide developers and everything else, which is pretty crazy. But yeah, everybody's trying to get the heck out of Terra. I don't think they have a super bright future just because they have such a tainted name. And this is just another sign, like I said, that the future is not looking too bright for them.
Oh, hell no.
Okay, and last crypto story is U.S. Treasury develops a framework for international crypto regulation. So the fact sheet, which is the first report published by the department as a result of Biden's executive order on crypto a few weeks ago, said the framework is intended to ensure that America's core democratic values are respected, pointing to consumer, investor, and business protection, the safety of the global financial system, and interoperability. According to the sheet, the framework policy objectives also include reducing the potential use of crypto for illicit finance, promoting access to financial services, supporting technological advancement, and reinforcing U.S. leadership in the global financial system.
Totally.
Now, honestly, this is somewhat of a nothing burger, nothing substantial really coming out of it, but given everything going on in crypto, Celsius bank run, Terra Luna collapse, and everything else that's hardly covering it, but given all the signs they're seeing that this industry, this market needs to be regulated, it's no surprise that they're taking steps to do just that, and they're trying to coordinate this, because it's not just with the U.S., they're trying to coordinate this with other nations, develop some type of international framework. I would say it's probably more positive than negative, just because there isn't anything super explicitly bad said from this. Obviously, stay tuned. Who knows? But if I had to guess, they're probably going to try to spin this as the technology is good, but they're just the crypto verse itself is just struggling and shady and all that crazy stuff, because they probably want to promote the technology to advocate for CBDCs, because governments love that because it gives them power and control, just all that stuff we don't want to give them. But at the same time, they want to discredit something like Bitcoin or crypto writ large, so they'll probably frame it in that way. So I'm sure they don't want to be too disparaging about the technology. That way it still opens the door for CBDCs, but I'm sure the regulation is going to attack a lot, at least, honestly, I kind of hope for this, at least the more speculative stuff, just because it's so scammy in the altcoin space. It got a little out of hand. I think everybody can admit that. So we'll see what they do, but not anything super significant to report on. But at least taking steps to address the crypto regulation problem. All right, so that's it for the stories for crypto. And let's talk about what's happening next week.
Totally.
So we had inflation today, but tomorrow we have China GDP growth rate for Q2 comes out tomorrow with a forecast of 1.1%, which is a steep drop from the previous quarter of a positive 4.8. The China slowdown is real, and forecasts are accounting for it. And then we also have U.S. June retail sales come in on Friday with a forecast of 50 basis points to the upside after being down 30 basis points the previous month. And then UK inflation numbers come out Tuesday with the forecast mirroring the previous rate of 9.1%, which the same number we got this month for US. But yeah, crazy number. So they're still projecting that for this upcoming month, but definitely watch out for that. See if it beats or doesn't beat expectations. But yeah, that's all I have for you today. But just remember, it is hump day, so keep the good vibes alive.
Wow, I feel good. I knew that I wouldn't.
All right, well, that's all I have for you. Tune in next week. See you guys.